Joining us today on this earnings call is BSE's leadership team, consisting of Mr. Ashish Kumar Chauhan, Managing Director and Chief Executive Officer, Mr. Nayan Mehta, Chief Financial Officer, Mr. Neeraj Kurushreshtha, Chief of Business Operations. Do note that the conference is being recorded and a transcript of the same will be available on our website during the duration of the quarter. The financial results and the investor presentation are also available on our website. I would now request Mr. Ashish Kumar Chauhan to give a brief overview of the company's performance, followed by Q&A session. BSE does not provide any specific revenue earning guidance. Anything said on this call which reflect the BSE's outlook for the future or which would be constituted as a forward-looking statement must be reviewed in conjunction with the risks the company faces. With that, I would like to turn the call over to Mr. Ashish Kumar Chauhan.
Thank you, Yatin. Good morning, good afternoon, and good evening to all of you, wherever you are. At the outset, I am very happy to share that BSE has posted growth of 32% year-on-year to rupees 237 crores in terms of profit from continuing operations on consolidated basis for the year ended 31st March 2018 as against 179 crore rupees for the previous year. Further, the profit on consolidated basis attributable to shareholders for the year ended 31st March 2018 rose by 222% to 711 crores as against 221 crores for the corresponding quarter in previous year. The board of directors have recommended a payment of final dividend of 1550%, which is rupees 31 per equity share of face value of rupees 2 each. Thus, the total dividend for the financial year 2017-18, after considering the interim dividend of 250% paid in the month of February 2018, is 1800% total, which is 36 rupees per equity share of the face value of rupees 2 each. Over the past few years, BSE had been receiving suggestions and requests from investors to return a part of the excess cash lying in its books in the form of dividend or buyback of shares. The board of BSE in its meeting held on 15 January 2018 approved buyback of shares through open market route, stock market mechanism. The board's decision reflects its confidence in BSE's future and its commitment to deliver value to all stakeholders and strong balance sheet. As allowed under Companies Act, the board approved buyback of shares to the extent of 10% of equity and free reserves amounting to rupees 166 crores. The maximum buyback price of rupees 1100 per equity share was approved by the board after considering various factors, including trends in the market price of the equity share of BSE during 1 month, 6 months preceding the date of the board meeting, including average of the weekly high and low of the closing share price of the equity shares of the company on the stock exchange, the network of the company, and the potential impact of the buyback on the earnings per share and other similar ratios of the company. Accordingly, BSE proposed to buy back 15 lakh or more equity shares amounting to 2.8% or more of the paid-up capital of the company at market price, subject to a maximum buyback price of rupees 1100 per equity share and maximum buyback amount of rupees 166 crore. The buyback commenced from February 1, 2018. The company has bought back 8,99,160 number of shares at a total cost of 72 crores from open market till 3rd May 2018. India International Exchange, a wholly owned subsidiary of BSE, continues to expand its footprint through various listings, product offerings, and growth of turnover. In February 2018, Yes Bank, acting through its International Financial Services Banking Unit, listed its senior notes due to 2023 under $600 million medium-term note program on the global securities market of India INX. This has been followed by listing of senior notes due to 2028 issued by the Export-Import Bank of India under $1 billion medium-term note program and listing of various notes of NTPC of $6 billion on the global securities market of India INX. We are in talks with other public sector undertakings to list, which is subject to regulatory discussions and also choice of the issuer. India INX would be introducing a new facility to enter orders on specialized contracts of straddle and paired options of a common underlying for which market-wide mock would be conducted on May 5, 2018 onwards. India International Clearing Corporation, a wholly owned subsidiary of BSE and Clearing Corporation for Settlement of Trades executed in the India International Exchange, started accepting bank guarantees issued by bank branches located in GIFT City International Finance Services Center as collateral from February 2018. Honorable Minister of Finance, in his budget speech in February 2018, stated that government will establish a unified authority for regulating all financial services in IFSC in India. Setting up of the unified authority is likely to substantially increase ease of doing business in IFSC. BSE Star MF, India's largest mutual fund distribution infrastructure, has introduced e-mandate facility on 20th January 2018. It's a completely paperless framework that will reduce the time taken for mandate approval to 3 days from 10 to 35 days taken for paper-based mandate approval. Various banks have been introduced for participating under the e-mandate facility over the last few months. To further facilitate the paperless framework and reduce process time, BSE has introduced Scan Mandate on BSE Star MF platform for mutual fund intermediaries and distributors. With effect from February 15, 2018, for faster resolution of queries pertaining to the Star MF platform, BSE has set up a BSE Star MF platform service center in February 2018. BSE launched platform for electronic book mechanism BSE bond for issuance of debt securities on private placement basis on 1st July 2016. Till March 2018, debt issuance above 500 crores were mandatorily required to be made through the electronic book platform of a stock exchange. SEBI revised the threshold limit downward to debt issuance above 200 crores with effect from April 1, 2018. BSE bond for bond issuance has been a preferred choice for companies to raise debt. In the financial year 2017-18, 84 issuers raised 532 issues of bonds and successfully raised 2.08 lakh crores using BSE bond. On February 14, 2018, Greater Hyderabad Municipal Corporation successfully raised 200 crores by issuing bonds on private placement basis using BSE bond platform. Earlier in June 2017, Pune Municipal Corporation was the first municipal corporation after several years to successfully raise 200 crores on the BSE bond platform. In the equity cash segment, BSE changed the basis of transactions, charges from ad valorem basis to trade count basis in Group A, Group B and certain other securities with effect from 3rd April 2017 to incentivize higher level of trading volume on BSE's electronic trading platform. In order to further increase liquidity in frontline stocks, BSE waived off transaction charges in S&P BSE Sensex stocks with effect from March 12, 2018. BSE launched cross-currency derivatives and cross-rupee options in Euro, US dollars, Pound, US dollars and Japanese Yen, US dollars. Futures and option contract in February 2018. It's early days for the same, but BSE is market leader in this. SEBI has recently made changes in the regulations to facilitate transition to a unified exchange regime from October 2018. Today, SEBI has also announced new market timing for stock derivatives, also to be in line with the commodity derivatives, which has just come in a few minutes back. In line with preparing ourselves to launch commodity derivatives transaction and also now the equity derivatives which will trade much longer, BSE has already held a mock trading session for such products. As you are aware, in India International Exchange, BSE is already trading 22 hours, so it's not new to BSE in terms of the long trading hours. BSE and Soybean Processor Association of India, SOPA, entered into an MOU for the growth and development of commodity markets and its value chain recently. And BSE is in the process of entering into many such MOUs with many participants and participant groups in India for developing commodities markets. Asia Index Private Limited, a joint venture between S&P Dow Jones and BSE Limited, launched S&P BSE Arbitrage Rate Index in April 2018. Now I'll cover the business update for the December quarter. BSE promoted India INX at GIFT City, Nandinagar, Gujarat, achieved a highest turnover of $529 million and highest number of contracts traded of 32,689 on April 16, 2018 and April 12, 2018 respectively. India INX had $240 million average daily turnover for the quarter ended 31st March. India INX has 30 active members as on date and over 66 membership applications in various stages of membership process. As on date, 122 products have been introduced on the exchange for trading in commodity derivatives, index derivatives, equity derivatives and currency derivatives. The average number of contracts traded daily for the quarter ended 31st March 2018 was 14,507. India INX continues to be the market leader in this segment, and the market share for the month of April stood at 83%. The market share seems to have improved after that. Our mutual fund segment, which is an electronic online order aggregation platform for investment and redemption of units of mutual funds through our broking members, as well as also through MFI, MFDs, and other aggregators, and their authorized representatives, has been showing superlative growth since the past few years and continues to be another high growth area for BSE. The segment has seen growth of 179% during the quarter ended 31st March 2018 on a year-on-year basis. The average monthly number of order processed during the quarter ended 31st March were 21.08 lakhs as compared to 7.56 lakhs during the quarter ended 31st March 2017. BSE continues to be market leader in this segment. The market share for the quarter ended the 31st March 2018 stood at 77%. On March 12, 2018, BSE Star MF processed a record 4.34 lakh transactions on a single day, worth 1686 crore rupees. I am glad to inform you that BSE started receiving fees from all the mutual funds on its platform for the services being rendered by Star MF platform. BSE SME platform has 241 listed companies on its platform as of 30th April 2018. 19 companies were listed on this platform during the quarter ended 31st March 2018 as compared to 13 in the corresponding quarter. BSE has a market share of 64% in the SME segment till in the March 31st, 2018. During the quarter ended 31st March 2018, BSE's platform for electronic book mechanism, BSE bond, for issuance of debt securities, completed 198 issues, raising 70,445 crores. The total number of issues completed in this platform since July 1, 2016 is 2,353. With respect to listing of securities, the number of companies listed with their equity capital on BSE which are available for trade are 4,069 as on date. BSE is the highest number of companies listed on any exchange around the globe. In the equity segment, the average daily turnover in the quarter ending 31st March 2018 was rupees 4,711 crores. Further, daily average number of trades in the quarter ending 31st March 2018 was 4.5 lakhs. The average daily turnover in our currency derivative segment grew by 77% from 12,215 crore in quarter ending March 2017 to 21,625 crore in quarter ending 31st March 2018. BSE's market share in currency derivative segment for the quarter ended 31st March 2018 was 48% compared to 38% for the quarter ended 31st March 2017. On quarterly financial results, the consolidated total revenue for the Q4 financial year 18 grew by 6% over Q4 financial year 17 to 195 crore, and consolidated net profit from continuing operations grew by 27% to 62 crore. Our operational income has risen by 19% to 137 crore in Q4 financial year 18 from 115 crore in Q4 financial 17. Our EBITDA increased to 85 crore in Q4 FY18 from 69 crore in Q4 FY17. The EBITDA margin has grown from 37% in Q4 17 to 44% in Q4 18. Further, our net margin from continuing operation has grown from 26% to 32%. The growth in revenue and profits during Q4 FY18 has been strongly aided by growth in operational revenues. Revenue from operations have consistently increased over the last few years. Our income from security services has remained consistent at 67 crore in Q4 financial year 18 compared to Q4 financial year 17. Transaction charges income grew by 6% to 47 crores. Our income from services to corporates has increased by 51% to 62 crores in Q4 FY18. BSE's net worth on standalone basis as on 31st March is 2,774 crores, of which 767 crore is in the nature of capital reserves. As on 31st March 2018, the total balance lying in settlement guarantee fund maintained by our clearing corporation is rupees 258 crore, out of which additional contribution made by BSE in accordance with earlier SEBI regulations 55 crore, which will be offset against minimum required corpus requirement in future. With this introduction, let me welcome you once again and invite all of you for the question and answer session. Thank you. Yep, we start the questions.
Yes, sir. At this time, if you wish to ask a question, please press star then 1 on your touchtone phone and wait for a name to be announced. First question comes from Mr. Ayush Khetan. You may ask your question.
Congratulations, sir, on good set of numbers to hold the BSE did. Couple of questions, sir. First, can you put light on the rise in admin and other expenses during this quarter?
Okay, Ayush?
Yes.
Just one second.
Yeah.
See, the main item which is increased in this current quarter is with respect to repairs and maintenance of building. Our building is more than 40 years old around now, and obviously it needed some renovation. As revised by auditors, we had to write it off in the year of expense.
Okay, so approximate how many would be the amount of for that, sir?
So for that, basically the total amount spent is 12 crores in this quarter.
Okay.
So that is one major item, and obviously there are some there is contribution to CSR, then there will be contribution to semi-mandated expenses in the nature of investor services fund and all those things.
So this was a one-time expense during the quarter for repairs and maintenance of the building. Okay.
This was the major one, yes.
Yeah, and the question to Ashish ji, sir, wanted to know about your strategy behind waiver of transaction charge on Sensex 30 stocks. Will its income be set off by other head of income of like mutual fund? Wanted to know about in your
Basically, mutual fund income will be much larger than what income we would have earned from the Sensex 30. Basically, we had a choice to advertise and spend a lot of money. The other way is to sort of do this kind of things so that people get to know what BSE is doing. And this is what I call a very targeted way of advertising yourself in a different way, right? But we continue to monitor sort of results out of that. And we continue to figure out whether we need to change any of our strategies or not.
Okay, so transaction turnover will be more than expected, our estimated transaction, due to set of the charges.
I didn't get the last one.
To conclude, behind the strategy is that our transaction turnover in this Sensex 30 stocks will increase. So this is the main motive behind our waiver of transaction charge?
Correct.
Okay. And lastly, sir, follow-up question on this. On mutual fund, what will be the charge sheet on mutual fund transaction?
Mutual fund average, we are in the process of charging average because there are SIP transaction, active transaction, all sorts of different charges are there, around 5 rupees per transaction average.
Okay, on an average 5 rupees per transaction. That also
there are larger guys being charged smaller and smaller guys being charged larger, but broadly I think currently blended rate should be in the range of 5 rupees.
Okay, so we are already, we were charging before that. So the charge sheet is as same as old charge sheet or some we had changes in the charge sheet?
We did not charge before because people were not paying. We were hoping to charge, but from this month, in March we charged, and then but mostly everyone is going to be charged from April.
Okay, so we are following the same old charge sheet from the time that they were not paying, but we have our charge sheet.
No, boss. That charge sheet was basically issued to sort of make people aware that there will be a charge.
Okay.
After which there has been an individual negotiation. Okay. And now everyone is paying different amounts. Okay. That charge sheet had around average blended rate of 9 rupees per transaction. After negotiation and everything, of course nobody was paying. It was a hope and a prayer that people will pay. Nobody paid for almost more than 1 year and 3 months. After negotiation, it has now come down to around 5 rupees blended.
Okay. Yes, so what will be the expected income from the mutual fund segment?
First, you have to multiply that 5 rupees with average monthly rates and multiply it by 12, then you will get for the year. If you multiply by a quarter, then 3, then you will get for the quarter.
Okay. Yeah, okay, no problem. Thanks.
Thank you, Ayush. Next question comes from Shrikant. You may ask your question.
Hi, thanks for taking my call. Just wanted to get the bottom line figures of INX. How much are we in cash loss today?
See, INX as on date has spent around 34 crores.
This is for the quarter or for the year?
No, this is cumulative till date.
Okay. And how has that performed as compared to the previous year?
No, means, last year only, it's worked only for 2 months, starting from January mid. So this was the first full year of operation. And obviously, this is a very big setup there. So obviously, there will be some gestation costs.
Right. Yeah, I remember you said that in the past conference that you were looking at kind of 3 to 5 years as break-even point for INX. But given the amount of significant ramp-up in the turnover, do we want to kind of revise the estimate figure, or we still continue to believe that it would still take about the same time frame?
Because the concept is very simple. We will charge when we have market power to charge. Right? Currently, NSE has announced zero cost for next 6 months in their NSE IFSC. So we have to match it. They're trying to charge 20 cents a contract from April 1. But since NSE announced it, we have to also match it. So till the time some reasonable market power comes, we have to ensure that we continue to be the market leaders even without charging. And then we'll start charging like what we have done in the mutual fund business. Where NSE is still not started charging, but BSE start charging now.
Sure, sir. And incrementally, how much investments are we looking for into the INX exchange, say, over the next 2-3 years?
Basically, on a 5-year scale, we had planned for, there is something called regulatory capital which doesn't get used.
Okay.
And then there is a non-regulatory capital which is what you end up using. And so, there is 100 crore to be done for the regulatory capital for the equities, the exchange part. 300 crore for the clearing corporation, 400 crore goes as a regulatory capital. And then on top of that, if we are incurring 25-30 crore rupees worth losses for next 3 or 4 years, then we'll have to add 150 crore more for that situation, right? So that is broadly the numbers, unless SEBI changes downward the numbers required for the exchange regulatory capital and clearing corporation regulatory capital.
Would this kind of setup, be impacted by the ongoing, products which are being introduced in SGX, given whatever has happened post the implementation of, laws into the IFSC also? SGX has actually turning out to be a more threat rather than, what we were expecting earlier.
We were expecting at the time of starting IMX that SGX will continue to trade Nifty. Right? That was the assumption, at least we had. Probably, I don't know whether you had any indication that SGX will be stopped from trading. So,
no,
so now that it has happened, I take it as a positive. But again, only future will say what will happen.
Sure. But do we foresee any kind of change in the investment strategy in terms of more than our planned investment? In any case, that becomes a threat, sir, if I have to...
There is no need for additional investment, but till February, SGX was supposed to do it for the rest of their life, right?
Right.
Only in February this got changed. And what was the outcome of that change, at least potential, is that the IFSC exchange will gain, right?
Right.
And that hypothesis may continue to remain just because you created what I call a new fake product. Possible that your fake product may become larger than normal product, but there is possibility that the fake product may not work. right? So it remains to be seen how it works. But clearly what has happened over the last 3-4 months in terms of the that product licensing framework from Indian exchanges is clearly positive for the IFSC exchanges.
Sure, sir. Sure. And my final question, sir, is on the technology side. You mentioned in the presentation that the technology investments continue to be in the range of 16% of our total revenues. Is that the run rate which we can expect going forward also?
Yes. I think so. That might be slightly some bumps up or down a little because of some specific issues we may have, but currently we don't see any large sort of capex going forward, except probably one or two small little things here and there.
Sure, sir. Sure. And with regards to the commodity exchange soft launch, do we still believe we are on track to launch the exchanges from 1st October, if I understand it correctly?
Yeah, we have been ready for the last 3 years. So as and when, if the stock exchange are allowed to trade commodities, we will certainly be there on 1st October or whatever date SEBI allows us to. Today's announcement by SEBI to allow from October 1 equities derivatives exchanges to trade till 11:55 is a heartening thing in that direction, because it tells you that SEBI is serious about October 1 making it universal exchanges, right?
Sure, sir. Sure. So the final question on my side is, given these kind of initiatives which is being done by BSE, to kind of launch new avenues of revenues, but traditionally we have been lagging behind the equity cash segment. Is there some sort of a strategy by the management, to kind of make a thrust to kind of improve the market share in that segment? Because historically we have been seeing that BSE has not made any progress in terms of the market share there.
There are historical reasons and there are real reasons for not being able to capture market share. In fact, we have been losing market share in equities, because if you are trading equity derivatives in an exchange, you will also trade equities there, right? And that's where also algorithm trading, co-location facilities, when they allow co-location between equity and equity derivatives market, it is only happening on that exchange where equity derivatives is there. Traditionally, BSE missed out on that bus when it was allowed in 2001. And almost now 15-16 years, BSE has not been able to make any dent there. We will continue to try to make a dent by having this Sensex 30 stocks value, the transaction charge being waived or anything else. But we have also seen in the past when we were trying to bring derivatives, because of which the equities will come, we were paying for the order flow and we spent large sums without much results. At the same time, there are a few interesting structural breaks that are coming. One is the delivery-based derivatives. Second is this new market timings. Third is probably somewhere else, some more things are being talked about on interoperability of clearing corporations and all. So we think there is a possibility that many of these things may result in making a level playing field for BSE. But currently, I agree with you that we have not been able to make a dent in the equities and equities derivatives markets.
Sure. But is there a specific kind of strategy in this segment, or is it something which we are letting the market forces dictate how share will, how our market share will
we have a lot of strategies. Being a highly regulated entity as well as being a first line regulator, most of the strategies which commercial organizations adopt, we cannot adopt. We are not allowed to adopt. And that's why all what is approved, what is allowed must be done, and we stay within our limits in that. And so strategies are subject to regulatory guidance available or regulatory approvals if the guidance is not available.
Sure, sir. Thanks so much for taking my question and all the best for the future, sir.
Thank you, Shrikant. Next question comes from Sureddy. You may ask your question.
Actually, this has been answered, so I'm out of the queue. Thank you.
Shall I take the next question, sir?
Yeah. Go ahead.
Next question comes from Mr. Nitin Agarwal. You may ask your question.
Thank you for giving an opportunity. Sir, I just wanted to ask that if we see the transaction charges has increased 23% year-on-year in FY18, so which segment has contributed to this growth? Is it the A and B group stocks which are charged on per trade basis, or the other group stocks on which we had increased our transaction charges to 0.1% on turnover? Hello?
Excuse
Hello?
me?
Yes. Hello?
Just a second, sir. Excuse me, Mr. Yateen Sadia.
Yes.
Yes.
Hello?
Yeah. Can you hear me now?
Yeah, I can hear you. So that's what basically the answer is.
Okay. Actually, I think I lost the conversation, so I couldn't hear what you said.
It's basically on both counts. A group, B group, where trade-based thing is there, and on the exclusive group where on ad valorem basis, both sides have seen good volumes and good increase because the market was buoyant.
Okay. And my second question is in core SGF, we have seen an increase of 86 crores during the year, and I believe that through PNL we had not contributed anything for FY18. So what was the reason of this increase? Like, from where did we get this contribution increase?
No, see, SGF does not only have cash contributions, it has collaterals and all those things also.
Right.
So, means if the market volume increases, there is some collateral which also comes into that. So, BSE's contribution, otherwise on the cash side, it has hardly paid any money this year. It has not paid any money at all this year. So, as far as BSE is concerned, there is a credit of around 55 crores, which remains to be offset in future, as and when there is a requirement to be funded.
Okay. Thank you. That was it.
Thank you, Mr. Nitin.
So I'll tell you a story without asking question, okay? So I was in New York last month, and I met a fund manager come analyst, and she was vehement that BSE's annual profits will never go above 175 crores as of 2017-18. And I was totally surprised. She had a model which had gone from some of the analysts which are on this phoner. And she was like totally clear. And I told her, madam, but reality is that in 9 months we have made more profit than what your model suggests for the entire year. But she was completely confident of her model that you will not go above this. Whatever happens, probably, then I said that we might have to make losses for the next quarter to fulfill your expectations. And then she said many of the analysts are saying that BSE management is not able to answer well and so on and so forth. But the other way around is there probably that models probably are wrong, but the tremendous faith people have in their model vis-a-vis the realities actually which BSE comes out with seem to be pretty different. So now that it has come out to be around 238 crore, 248 crore on consolidated basis, on standalone basis vis-a-vis our 175 crore expectations, I thought it's just a cautionary tale for most of the analysts who seem to be more bothered about the models rather than looking at the real numbers. Okay, any other question we have?
Yes, sir. Next question comes from Mr. Ashish Chopra. You may ask your question.
Yeah. Hi, sir. Thanks for the opportunity. Sir, my first question was, maybe, Nayan, could you split the transaction charges between what would be the contribution from the exclusive segment where you're still charging on an ad valorem basis vis-a-vis the non-exclusives where you are charging on a per trade basis?
So, Ashish, we have discussed this thing in earlier meetings also. basically around 50 to 60% comes from specific and exclusive group basis, and the remaining 40 to 50% comes from the common trade count basis. So this thing is something which has established over a period of over the last few years, and it is continuing the same trend.
And if my understanding is right, the volume contribution from the exclusive segment would be less than 10%?
Yeah, it will be less than 10.
Okay. And Nayan, any outlook on what would be the technology expenditure that you would have budgeted for in the next fiscal?
See, as far as technology budget is concerned, generally you presume that, okay, it will be 10% more than the previous period. Because, when we have to resign our AMCs, there is outright escalation of 6 to 7% minimum in any AMC. So, and this is a technology business which we are running. So, this obviously that goes along with it.
Okay, fair enough. And since you've now started charging for the mutual fund platform, and as you mentioned that NSE is not yet charging, would you have seen any impact of that on the market share in the month of April, or it would have stayed in the same range of north of 75%?
It is. Probably I was told it is 81, but for me these are all temporary, nothing to brag about. Currently we are able to charge itself is a great relief.
Frankly, charging has nothing to do with market share, because nobody gets hurt in this thing.
Not only that, boss, the other side, if you look at it, we are not charging on few things. Still, NSE continues to hold market share. So those are, I think, more to do with getting people on your marketplace first, and then if they are comfortable, they stay back, right?
Fair point. And just lastly from my side, so since you've now not been levying any charge on the index scripts, would that have been a fairly noteworthy contributor to your transactional income in the last fiscal, or
not much? Well, that's why it was done.
Okay. That's it from my side. Thanks for answering my questions, and all the best.
Thank you, Mr. Ashish. Next question comes from Ms. Dimple Kotak. You may ask your question.
Yeah, hi sir. So just wanted on clarification. In slide number 21, where the average value per order for mutual funds have gone down to 69 versus 115 YOY. So, any reason for that? Hello? Hello?
Mr. Yatin Padhya, are you on the line?
There is some issue with
sorry for the interruption, sir.
Yes.
Hello?
Yes.
Your voice is not proper, sir.
Hello?
Still there is issue from your line, sir. Hello?
Can you hear me now?
Hello?
Can you hear me now?
Yes, sir, but there is issue. There is some issue from your line.
There is some issue from the line.
Yes, sir. It's perfect now.
Now it's okay?
Yes, sir. Perfect. You may
so,
go ahead.
Basically, what it tells you, when mutual fund the value per transaction goes down, more retail investors are coming into the market using BSE StarAway platform.
Okay, sir. And sir, what is the average monthly trades on the mutual fund platform?
Currently, it's in the range of 22 to 25 lakh transactions a month.
Okay, sir. Okay. Thank you, sir.
Thank you, Ms. Dimple. Next question comes from Mr. Alok. You may ask your question.
Yeah, ma'am, quick question. What is the free cash that you have at the end of the year? And if you could just give me that number, pre the announced dividend and post the announced dividend and buyback.
See, I'll look at it like this. As we just mentioned in the speech that we have got the total our net worth is 2,700 crores on standalone basis, of which 700 is in capital reserve. Now, leaving after this 200, now we have got 2,000, of which obviously there will be some amount of 100 crores of buyback 200 crores of dividend. So and then you have got investments to be made in INX ICC. So that will be around 300, 400 crores. So you can say anywhere around 200, 300 crores which will remain as cash in our books.
Okay. Okay, got it. And that if technically we wanted to distribute, we could distribute.
That is a hypothetical question.
Technically. Yes, of course. Now on the employee expenses on a year-over-year basis, it was down by about 8 crores. What was the reason for that?
See, last year we had given some special exhibition payments to employees because they had completed 2 major projects, which is in IPO and also INX, set up INX in a very short time frame. Those are non-recurring costs. So obviously that impact is showing up in the current year.
Okay, got it. And the admin expenses on a sequential basis, I would have to add this 12 crore of one time, or take it out from this quarter. If I take it out, still the admin expenses on sequential basis have gone up about 20%. So what's causing that?
Just one second. Basically, the payment to SEBI regulatory costs because it's actually on almost ad valorem.
And CSR expenses generally come in the last quarter for us. And then again, some bad debts which we have written off in this period. So, accumulation of this cost, Majorly, more of it you have to, much of it you have to consider it as a building repair cost, which is non-recurring.
Yeah. Okay, thank you.
Thank you, Mr. Alok. Next question comes from Sri Karthik. You may ask your question.
Hello, sir. Thanks for the opportunity. Between the liquidity enhancement program that you instituted in GIFT City comes in the consol numbers. Is there any guidance with respect to how much you'd want to spend there?
The last time the leaps I think was for 3-4 months only. Now next year it will be for the full year, so it will increase by that much.
Similar amount on a quarterly basis, about 2 crores?
Pretty much.
Okay, so just to give us some sense, the last time when we had this leaks in our onshore exchange, the peak cash burn was about 50 crores in 2014.
Peak burn was probably 90 plus crore in year. But that is not relevant in this case.
And the primary difference would be STT?
Yes. So STT was the very large cost, which is not here in the GIFT City.
So generally from an expectations perspective, with a similar amount of leads program, could we get to that 25-30% market share that we've got onto equity derivatives during the earlier period?
Currently in GIFT City, the India International Exchange is 90% market share.
Yes, sir, but assuming that once the move from SGX happens and then NSE also runs a full-fledged platform, we would see some migration of market share?
Let's see. These are all hopes about sort of many things, and aapke muh mein ghee shakkar, let us wait and watch.
Okay. On another note, if you could talk about what's happening on the currency derivatives segment post the regulatory changes. There have been multiple regulatory changes during the past 6 months affecting currency, interest rates, etc. If you could tell us what's happening there in terms of
a lot of you also sprayed or got an understanding that now NSE will become 100% of market and BSE will slowly become zero. Incidentally, BSE has become now probably more than 50% of the market after those changes have happened. Right? So, in fact, it has been net positive for BSE despite the expectations of contrary from most analysts. Who had also, some of them had written also small notes about the eventual demise of BSE's currency derivatives, which has not come out to be true, and BSE has become now larger in trading volume compared to NSE in currency derivatives. In current month contracts, which is the main USD INR current month contracts, we are like 55, 60, something 70% of the trading volumes every day, day after day.
Yeah, so my question is, RBI is now allowed to increase the maximum unhedged exposure to $100 million. Did that have a system level increase to the volume?
I am giving you the same answer. After the $100 million on aggregate basis, earlier there used to be on
15.
Exchange difference. It became common and people wrote an obituary for BSE's currency derivatives. And we have proved that we can actually beat them hollow. Right? That is what has happened in last quarter. We have basically ensured that all the predictions of this, that BSE now will come down to zero, has actually come to zilch. And BSE is now larger than NSE. On overall, as well as the main important US dollar, Indian rupee currency futures every day for last 3-4 months.
And also, you mentioned that we have a 22-hour trading cycle in our GIFT City exchange. What is the significance of that, sir?
It basically says that when Japan starts, we start. And when California sleeps, we sleep. We cover the entire gamut of all the activities of equities, commodities, currency markets anywhere in the world. We are competing with them.
Okay, but from a technology perspective, is that something which is difficult to replicate?
In a sense, it is not difficult to replicate, but then it is difficult to replicate by human. Ultimately, some humans are required. So I have been told NSE, IFSC doesn't trade so long.
All right.
It shows also our seriousness to every cause we take up, including the IFSC.
Thank you so much.
Thank you, Mr. Sri Karthik. Next question comes from Mr. Ankur Shah. You may ask your question.
Hi, so can I get a bit breakup of the different segments which we have listed, like the companies, currency derivatives, interest rate, debt, star MF? Is it possible to get a bit breakup for that?
No, one thing that we are doing a common resources and common infrastructure for all our segments. And the same resources are used for any further new initiatives which we do. So it doesn't make any sense for us to, just do hypothetical breakup.
Okay. And so one more question, more from overall your sense on how these, I'm seeing the presentation which the BSE has made, and in all the new segments, we have a leading market share, or at least a market share where we can build up something meaningful. So, sir, as the size of the opportunity, the size of the business, what is your overall view? How far are we from making money, meaningful money in any of these segments?
See, for us, small amount of money is meaningful. For a large company, large amount of money may not be meaningful. So currently we are making some money in currencies, in mutual funds. Bond, currently we are not making too much money. But SMEs also we have started making some money. So we are, in a sense, making money as well as we are holding on the market leadership position. When these things grow up, when these segments grow up, we will be the beneficiaries.
Okay. Thank you so much.
Thank you.
Thank you, Mr. Ankur. Next question comes from Mr. Mehul Mehta. You may ask your question.
Hi, sir. Wanted one clarification. In terms of income from investment and deposits, is there any restatement? Because as against 238 crores for FY17, currently it is being shown as 198 crores for FY17.
Mehul. What had happened is that last year, one of our group companies, which is a clearing corporation, they had to sell their bonds which they were holding in their books because of a regulatory requirement. And because of that, we had to book that profit in that previous year. And obviously, that is a non-recurring item. And because that is the main reason why because of which you are seeing this dip.
So that has been reclassified under exceptional item or something?
No, it has not been reclassified because it was in course of normal business.
So it will be now part of operational income, is it? How should we take it?
It was already considered in previous year as income. So this year's income, if you see little down as compared to previous year, it is because of that reason.
Actually, no. What I want to know is that, earlier for FY17, the amount shown was 238 crores income from investment and deposits.
Right.
And now it is being shown as 198 crores for FY17.
So you should assume that 198 or similar will remain in future, plus minus the yield that changes.
Going forward, you are saying? Okay.
Yeah.
All right. Thank you.
Thank you, Mr. Majan. Again, we have Mr. Ankur Shah. You may ask your question.
Just one follow-up question. Sir, on the book building fees, last year we saw a very major bump up from 143 crores to 331. So, sir, can you give a breakup of this segment, as in, are these fees only related to IPO book building, or does it include anything which is more non-market related?
Million. So you are saying million, not crore.
Yeah, sorry. Yeah,
because I was little surprised, where is my income of 331 crore? But I was telling my CFO.
Sorry for that.
That he is showing you, but not me. Right. So basically it's a function of market. If the market is good, we'll continue to have more companies coming for building and even offer to buy and offer to sell and all those things, where we are pretty much the market. These are smaller markets, and we have developed a good team and enthusiasm and technology to take that market. But if markets don't do well, then this sort of small little things don't happen.
Okay, and in this particular segment, do we have any exclusivity, like, let's say, for example, a particular buyback which goes through only through the BSE exchange, or do we have any sort of exclusivity, or it's if the growth is over here, then obviously it will be there on the NSE? Is it like that?
Not that. Basically, if you heard of TCS buyback,
TCS,
right. Yeah, it happened only on BSE. If you heard of Infosys buyback, it happened only on BSE. If you heard of any other buyback, it would happen only on BSE.
Okay.
There was a buyback which took place on NSE, but because of market demand, eventually company had to come to us, request us to also conduct the buyback. To that extent,
there are some areas which are small, we are very good at, but as somebody pointed out, we don't yet make too much money there.
Okay. Thank you, sir. Thank you so much.
Thank you, sir.
Thank you, Mr. Ankur. At this time, there are no further questions from the participants, so I would like to hand you back for final remarks to Mr. Yatin Padia. Over to you, sir.
Thank you for joining for the BSE earnings call.